Well, hi everyone. Welcome to the Buffett and Beyond Research Saturday Market Recap, and this is for August 17th, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And folks, for those of you who want our letters 4 times a week and 3 videos on the weekend, you can get a full month free subscription, 4 letters, 3 videos. All we need is your name and your email. No credit cards or anything. Just go to our site, buffettandbeyond.com, right down here at the bottom. And Buffett is spelled with 2 F's and 2 T's. Buffettandbeyond.com, all one word. And this week, the market finally had a positive week in over a month. And what a week it was. The tech stocks finally took the reins back again on the market and pulled the NASDAQ and the S&P up and up, as well as helping the Dow go higher and give us buy signals on all our intermediate term indicators. And folks, we are near all-time highs. In our weekly stock analysis video, word came out that Warren Buffett's Berkshire Hathaway fund bought Ulta Beauty stock. And let's see why in the world he would do that at this particular time, because we don't have it any longer in our portfolio. So let's see what's going on. In our ETF video, 2 of our top stock ETF portfolios gained a full 10% this week. A full 10%. The portfolios trading the hedges along with being fully invested gained even more in their portfolios. They're up about 12%. Very, very nice. And let's see how our portfolios are doing year to date. And this was as of Thursday, or the close on Thursday. The top stocks in the QQQ portfolio up 33.8%. And if you're timing the hedges, we're gaining in that area, up 40.3%. Our Sector Stars ETF portfolio up 28.2%. If you're using the hedges as timing, up 33%. Our 30 growth stocks, which have some defensive stocks in that also, up 20.9%. And if you're hedged, up 28.5%. S&P, meanwhile, is up 16.2%, having a fantastic year. But look what our portfolios are doing, folks, all the way over here. And when you compare it to the S&P 500, remember, the S&P 500 outperforms 96% of professional money managers who manage the publicly traded mutual funds. 96% of them cannot beat this S&P number over any 10-year period, where our portfolios continually outperform. All right, let's look at the S&P, and we can see the terrible week we had a couple of weeks ago when we fell 3 days in a row. Nasty. Fell below this bottom volatility band. Then the next day closed right at it. The next day after that closed right at it. Because when it falls below or goes above that band, it's a powerful market. And finally closed within it, and we have had a rally ever since. And this line in here is a 20-day moving average. We're above it, and as I'm recording this just before the close on Friday, we're still heading toward that upper volatility band. So we've got a way to go. And when we look down here, our intermediate term indicator just starting to cross over, we might have a long way to go here, folks. This could turn into some nice rally, even though we're coming into the weak part of the year, into September and October. Not nice periods of the market, but we might have a little pullback. We'll worry about it when that happens. But right now, these indicators are saying, let's go up. And let's look at the Dow Jones, and we can see we had this double top in here, and then we had that horrible decline, and now we're climbing back up. We're over the 50-day moving average, the blue line. We're over the green line, which is the 20-day moving average, and we're moving up as we speak. Down here, you can see the crossover to the upside. Black line crossing over that red line. Very, very nice. And S&P 500, using the candlesticks rather than the first chart that we looked at, same thing, above, pulling the 20-day moving average up. And boy, we want to see that 20-day moving average, the green line, cross over the 50-day moving average, and that would give us a bullish cross to the upside. Not quite a golden cross, but a bullish silver cross. And when that happens, we are off to the races. Here's the old highs, folks. We're getting very close. We're only 100 points away, or 125 points away, S&P points, that is. And I think we're going to get there because down here, it just kind of crossed over, and we're heading up. Same with the QQQs. Love it. Just got above that 50-day moving average, pulling the 20-day moving average up. And down here, same situation as the S&P and the Dow. We are moving up here, folks. And let's look at portfolio insurance. And over here, the SPY 440 put closes out today. And on Friday, in our Friday newsletter, the morning newsletter, we said to buy the November 15th 475 put. So we are protected about 12% below the market, and this covers about $140,000 portfolio. So we have these three puts going into the tough part of the year, folks. So we should be just fine with these protections. Now, this is different than the hedging, the timed hedging. These puts are on all the time, or you can take them off when these signals go up. So you don't have to have these in your portfolio now. But a lot of people have them all the time in case something drastic happens. So about 12% below the market. Think of your car insurance when you buy your insurance with the $1,000 deductible or whatever it is. This is the same type of insurance. So, folks, we had a fantastic week. The first time in about 4 or 5 weeks that we've had something to crow about. So you might as well go out on the beach with the seagulls and crow with them. And, folks, forget about the market over the weekend. Be with your family. Have Sunday dinner with your family. And, folks, you stay safe. Have a good weekend. And we'll see you back here in a couple of days.